Nigeria's equities market furthered its northwards movement on Wednesday, rising by 0.95% or about 260 billion naira at the close of trading section on Wednesday. The Nigerian Exchange Limited All-Share Index and market capitalization increased from a preceding trading earlier to the latest reading of 28.36 trillion naira. Now the stock market positive return year to date increased to 1.65%. This month the market has increased by 3.94% week to date. Now the market has risen by 1.44%. And now Transcorp, Access Corporation, you have Alex, UBA and Fidelity Bank shares were most traded as investors in 5,190 US exchange, about 6.47 shares there, valued at 19.471 billion. So let's get talking now. We have our guest who is joining us, Mr. Isaac Kanyalisi, a CEO Securities and Investment. Thank you for your time. Okay, so pending when we have Mr. Isaac Kanyalisi back, let's quickly take a look at the top 5 gainers for Wednesday's trending section, as we take a look at these and look at how well the market is doing. If you look at the top 5 gainers for the day: Academy Press, Livestock, Total, Cadbury, Honey Floor. And if you look at the top decliners, you also have Fidelity, Fixing, Linkage Assurance, Monsat, and Jay's Bank among the top 5 decliners for the day. So Mr. Isaac Kanyalisi is CEO Investment Securities and Investment. He joins us now. Thank you for your time. Talk to us about the current market sentiment being recorded in the market. It looks like the bulls are fully back in the market, given the trends that have been recorded in about 4 to 5 trading sections.
Yeah, if you look at the market, like when we were talking on Tuesday, we made reference to the fact that we've had 6 weeks, consecutive weeks of a very bearish outing. And when that happens, you expect that some of the equity, their prices would have gone down. That the market is trading on a value that is less than the fair value of those particular assets. So when that happens, you expect some speculators come back to the market to pick up those stocks in expectation that with time it will also increase in price and they can exit via capital appreciation. But another thing that has happened significantly in the market within this period also is the fact that as the year-end result, financial year-end result for 2022 is trickling in, some companies are declaring good results and they are declaring dividend. We also see that some investors will want to realign their portfolios to move into those investments that is promising a reasonable return when you compare with the fact that our inflation rate is now around 22.2%. So that is that on one side. As we go on, we should expect that this momentum, the boost coming back, it might not last really too long, because today we expect that there is an auction of treasury bills by.
Hello, Isaac, are you there? Okay. I mean, if you look at the current trends, yesterday specifically, the market capitalization increased by 268 billion. So perhaps we need to look at some of the market drivers. What are those stocks that are driving the market, or sectors driving the market? We need to take a look at that. Yes, of course, we know the bulls are back. And then of course the market is building some supportive level, but we need to look at sectors specifically driving this market. Isaac, are you there? I need you to talk to us about these sectors, particularly those market drivers. Hello. Okay. It looks like we lost Mr. Isaac Anyalese. But let's quickly take a break. We'll return now when we have him back. We'll be back in a moment. Please stay with us. All right, we have Isaac Anyalese, CEO, Securities and Investment. He joins us again. Thank you for joining us again. We were looking at, I was going to ask you what the market drivers, who are the market drivers or sectors driving this current positive sentiment in the market. So, but I need you to finish your thought that you started earlier. Then we can get into this, this other part of the conversation.
It's okay. The factors that are playing out in the market, as we are seeing, is corporate releases, implications for dividend and capital appreciation, and implications for portfolio rebalancing. Like I was trying to say before, when the results are trickling in, when the financial year results are coming in, you expect that some companies will do well, and for those companies that are doing well and who are promising a reasonable dividend yield of maybe about 8% or 10%, you find out that investors will definitely make investments in those particular equities in order to take advantage of the dividend position. You also have situations whereby some of those stocks that have declared dividend, even though they have declared dividend and the result is good, if investors who enter that market prefer to have their capital appreciation, if they see they've made significant capital appreciation over and above what they would have gained by staying on to collect the dividend, they will also move their stocks outside. They will move their stocks out of that particular investment and maybe push it into some other investment, having taken capital appreciation. So you also will have noticed that the portfolio managers at this time are also positioning their assets, because you have first quarter result trickling into the market. They are using the first quarter result to project what the second quarter result would be like. So if also some of the companies also very good first quarter result, you see investors will also want to key into some of those stocks. Portfolio managers are like too, and institutional investors will want to patronize those stocks that are those companies that are already releasing their first quarter results and with strong fundamentals, which means that they find the position of doubling. Don't also forget that after 6 months, some of these companies will also pay half-yearly dividend. So these are some of the dynamics that we are seeing playing out in the market currently. But today, we might be seeing something a little bit different, because with the auction of the treasury bills, 131.47 billion, coming into the money market, there might be some shift of emphasis in terms of investment. We have seen a situation where investors are buying up treasury bills, even when they know that the return is just about 7.4%, which tells you that the Nigerian economy is in a very difficult position, that investors are trying to get into any of the asset classes that can at least protect their investment, reasonably against erosion in value by inflation.
You talk about portfolio investors. Do we see a redirection of investment portfolio from the fixed income market to the equities market? Because some analysts are saying that because of the inflation rate, which is at high at more than 22%, there's a possibility that investment are evaluating their portfolio and also redirecting their portfolio. And so it's that position true?
It is very likely, because there is an inverse relationship. When the debt or fixed income market, is doing very well, you see that the stock market, equity segment might not be doing as well, and vice versa. So that possibility is there because of the level of inflation, and seeing that some of these other stocks get dividend yield and maybe price appreciation. It is possible for them, for investors or portfolio managers to reap returns that is higher than what is being promised by the fixed income market. Of course, the government having money to so much debt cannot continue, to offer instruments in the market at very high returns, which will be competitive to the inflation rate. So to that extent, there could be a diversion going forward. You could see a situation where the investors will begin to trend more towards equities market than the fixed income market.
You talk about bond option today earlier in your conversation, the opening of when you started speaking. Yes. So how is the market, the equities market, likely to react to that?
That's what we're saying. They will look, first of all, they will look at the option, at what is the interest rate that is going to impact their decision. So they need that very decision, that information on the option rate to be able to take position. So the impact might not be quite significant today, but by tomorrow we should be able to see how the option of today have played out in the capital market.
Let's take a look at few stocks before I let you go. For instance, on the gainers chart yesterday, we saw Academy Press led the gainers table with about 10%, closing at 130 kobo per share. While on the losers table, we saw Fidelity Bank, recorded the highest loss with a drop of 6.57%, closing at 5 naira 63 naira per share. That's 5 naira 63 kobo per share. So what's your position to this? So for Academy Press, what do you think is driving that appetite? And for Fidelity, so what's happening there? Is it a profit taking?
Yeah, for Fidelity, you expect that there is a reasonable level of profit taking, and the fact that their financial year result is not out, could also be a disincentive. But for Academy, in fact, the two stocks too belong to the convention of penny stocks. Fidelity, at some time last year, was still doing 3 naira something. You can imagine that somebody who invested in Fidelity would have, by now, maybe be looking at 100% or 50-something percent return on investment. So a sell down is possible in the face of the fact that their results have not also been made public as to determine what level of dividend they'll be paying, what is dividend yield, and how does that impact investor preferences and appetite. Which, like at the Academy you mentioned, like I said, is one of those things of at a particular level in the price of a particular equity. Investors could look at it as being generally underpriced, and because of that, they will begin to take position in that stock. You also know that this is the period when first quarter results are supposed to come into the market. So there definitely would have been some underlying causes for the trend that we have seen with respect to the two equities.
Okay. Let's wrap up with this. Give us your final thought. What's the outlook for today? So is the market up in the green or red? So what's the movement like today?
I expect to see a cautious buy. I don't expect the market to move up too high, and I don't expect it to drop significantly until the outcome of the auction is available to the market. Right. I hope it happens within the trading hours, and that if that happens, if it is bullish, it is going to affect the market negatively. But if it is bearish, if the outcome of the auction is bearish, it's going to affect the market positively. But if it is bullish, it will affect the market negatively. Okay.
Well, I think we'll just have to leave it there. Thank you so much for your time, Isaac Kanyalese. He is the CEO, Securities and Investment. Thank you for your time. We appreciate you for coming on board.
Thank you for having me in this podcast.
Yeah. So we'll take a break now. More conversations, interesting ones for that matter, coming your way after this break. Please stay with us.